Welcome back. Earlier today, the Commerce Department reported construction spending overall was down 0.1% in February to 1.844 trillion. Wall Street estimates were expecting construction spending to be unchanged from the previous month. Total private construction was unchanged. Private residential was down 0.6%. Single family construction down 1.8%. Private non-residential rose 0.7. Residential public construction rose 0.1. Non-residential public construction fell 0.2. So it's kind of difficult to kind of understand all that just by looking at the numbers. So better yet, let's look at the charts. The blue area chart represents total construction. The S&P 500 is the red line. Now, in the prior GDP report, we ran across the same phenomenon where we have a pretty strong correlation. As the blue area chart, which is total construction, goes up, so does the red chart, S&P 500. But starting basically the beginning of 2022, stocks started to get very weak and construction continued to rise. So we see a disconnect between total construction and the S&P 500 in the same way we see a disconnect between a rising GDP and a falling S&P 500. So what we can do is take a look at the individual components of the construction industry to try to understand what's working and what's not working, or what's weak and what's strong. So here we see residential versus non-residential construction. Residential is the red line, non-residential is the green line. The blue area chart is the S&P 500. So we see as the stock market hits highs late 2021, early 2022, and then starts to move lower, so does residential. It seems, at least according to this chart, there's a stronger correlation between the stock market and residential construction, not non-residential construction. We look at residential construction versus the S&P 500, and we see here quite a strong correlation. As stocks go up, so do residential construction numbers, and as one goes down, so does the other. We see the disconnect between non-residential and the S&P 500. Notice in the blue area chart this very sharp spike up. It seems that construction spending is even increasing in non-residential numbers, but stocks just are not connected to this. We take a look at the commercial construction versus S&P 500. Again, a very large disconnect. Stocks are weak, commercial construction is strong. We see highway construction versus S&P 500. Highway construction goes up a lot over the past couple months. S&P 500 not so much. Now, I don't think we need to jump into a very thorough analysis of each chart, but better yet, just recognize what seems to be moving with the stock market and what doesn't. And we can also use these charts to think about our own portfolios, to think, okay, what stocks do I own that may participate in residential construction or non-residential? Here is construction as it applies to healthcare. And there's a very sharp spike higher. Stocks, again, not connected to this at all. Manufacturing construction, a very sharp spike up. Not so much with the S&P 500. Office construction, a very sharp spike up, not with the S&P 500. So it seems that at least so far, the strongest correlation between stocks is residential construction. So if we see a lot of spending going on in other areas of the economy in terms of construction, it doesn't seem to be connected so much to stocks. I think it does make sense though, because I think that most stocks, publicly traded companies, at least that we probably own, in retirement accounts or investment accounts, are probably residential construction stocks. Now, here's something very interesting. This is lodging construction. And I think about this, I think that maybe in terms of hospitality, things of that nature, and we know, as a result of the 2020 crisis, the huge stock market sell-off, hotels really got hurt a lot. And maybe that's what we're seeing here in part. I mean, it's just speculation. But we see a very sharp sell-off or a reduction in construction spending as it applies to lodging. Now, if we're a value player and we think that maybe the lodging stocks are poised to set some sort of recovery, I want to see a continued resurgence. It seems like the lodging construction numbers are going up, but they're certainly lagging very far behind highway spending, for example, and commercial spending, for example. Compare that to lodging. A very, very different picture. Also, we have here power construction spending in terms of the power industry, not really so hot. Here's transportation. That's stronger. Not as strong as the highway spending, which seems to be making new highs all the time, but it seems like there is a lot of spending in transportation construction. Now we look at the individual components all together. So we see here for the red line, for example, that's the manufacturing construction numbers. Notice the acceleration, the massive acceleration, and these are in terms of millions of dollars, I believe, as far as, the multiplier here. The manufacturing construction, huge spike up. That's our number one strongest sector over here. Also, we see commercial, and then below that, highway and street spending. At the very bottom, the green line, lodging. Just above that, that's healthcare. So, and feel free to pause the video, take a really, close look at this, because this really kind of shows us where the money is going in terms of construction. And again, if we think about our own investment portfolio, hopefully it aligns with, the stocks that benefit from this. Now, overall, there's not a strong correlation between overall construction and the S&P 500, but I would venture a guess that maybe the manufacturing construction, maybe there are companies that are really benefiting from that. Now, here's the monthly percentage change over the past 30 days. Manufacturing construction up 2.64%. Behind that, power construction up 1.25%. On the downside, 0.68% losing on commercial construction. Now remember, commercial's actually been very, historically, as of late, it's been very strong, but it's selling off to some extent. Residential construction down 0.56%. Now here's a yearly percentage change. The biggest change, the biggest improvement, manufacturing construction up 53% in terms of net spending. 34% follows that in lodging. Well, that's very interesting, because we know that lodging has actually been the weakest sector. Take a look at the blue area chart again. That's how weak it was. We take a look at the components. The lodging is a green line at the bottom. But if we take a look at the year over year, it seems that lodging is up 34%. Maybe we really see a resurgence over here. And then if that's followed by commercial up 21%. Take a look at the correlations. Now, a 100% positive correlation is a one-to-one relationship. When one goes up by 1 point, the other goes up as well. A negative 100% correlation means they're moving to opposite directions equally. Take a look at the total construction, or actually what's very interesting here, take a look at the highway versus transportation, a 93% correlation, meaning that when spending rises in highway spending, it also tends to rise almost to an equal degree in transportation. Let's say residential and commercial, there's a strong correlation, but I don't know if it's correlation or causation, because again, maybe some of the companies that invest in one invest in the other. So I don't know that we can deduce a tremendous amount of that, but I thought it was, very interesting to consider nevertheless. And then finally, we see the yearly performance. 2023 is at the top. Now, this 2023, it's a month-over-month basis, so we only have 1 month worth of data so far. Residential's down 1%, manufacturing's up 3%. Take a look at last year. Manufacturing up 54%, lodging behind that at 40%. What's really interesting is take a look at the COVID stock market crash years, 2020. Lodging was down 30%. That's when all those hotels really got hit hard from the COVID crisis. 2021, they also really got hit hard. Now, again, they were up 40% last year, but still very much hit very hard. So I think that we can really use this data, and we're going to, every time they release a new report every month, we're going to continue to revisit these numbers. I think we can really use this data to try to anticipate maybe where the money is going within the construction industry. And I think it's important because it is such a huge component of our economy. And we can also use this to, sort of take a look at what stocks we have in our investment accounts that may, benefit from one sector or another. And moving forward, I think what we're going to try to do is really take a look at correlations with individual stocks in particular areas of the construction industry and see how how they correlate with these numbers as well. We hope this has been helpful. We look forward to seeing you back soon.